What's up, traders? Welcome to day 31 of the $1,000 account challenge, and I'm sad to report it's another red day. I'm down $150 in the account, or 6.81%. Now, these losses that I took percentage-wise today were pretty big, I'm not going to lie. But I knew that I was coming into the trading day with being on a couple of red trades prior, a couple of red days prior. We have that looming news still this afternoon with FOMC, so I wanted to make sure that I was sized down enough to mitigate risk in the event that the market wasn't acting favorably. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. Again, today's day 31. We are up over 100% in the account, but the past 3 days have just been taking profits away from us. So what happened? Straight off the day trade watch list, today was an earnings day. We had Microsoft as a long idea above 410. It was a post-earnings trade idea. And if I'm looking at this on the weekly time frame, this is the all-time highs for Microsoft. 5-minute time frame, it was wishy-washy in the pre-market, wasn't sure if it was going to go up or down, and then this morning, first 5-minute candle breaks well above the $410 trigger level and into new all-time highs. This is a very bullish thing in most scenarios for the stock. So I see it rally up, pull back, bounce off the previous day's close, rally up into new all-time highs. Things are looking good. I want to get an entry in on this dip because I don't want to miss the move. So I take the initial entry on the dip, not chasing the move up. I add to the position as we get a bounce at 410, and then we get the breakdown below. Now this is kind of where I made my mistake because I probably should have just closed this position out the moment that it broke below 410. But I knew that the bounce spot was at 409 and at the previous day's closing price, so I was giving it a little extra room to work. Plus, I was in with that smaller position size, so I could afford a larger percentage loss, but it still would be a small monetary value loss. So I did give it the time to work here at the PDC, was waiting for it to potentially bounce up off of this price point, reclaim 410, and run to the high of day. It just didn't do that. We get the breakdown below the previous day's closing price, and I still give it one more minute here. It starts to break down further, rallies up, and I wound up closing the trade here. So this was about a 56% loss on this trade. However, like I said, I was sized down, right? I was only adding in one time, and I literally was in this trade with 2 contracts. So my monetary loss, I think, wound up being like $130. Not that big of a loss in comparison to the account balance. But the percentage loss, again, 56%. Larger percentage loss, I probably could have just closed this position out well before we get the break below the previous day's closing price. So my next 2 trades, then I go back in, right? My next 2 trades are on Google, which is a short below $142. So Google, also a post-earnings trade idea, opens up. We get the opening consolidation here after the gap down from the earnings, the break below 142 there. Here's your move down into the low of day. And what I'm thinking is this old point of support should be a new resistance. And so that's why I take my entry short right here. Stop loss is at $142. We just don't get any follow through. So we get the consolidation, we get the breakdown into the low of day, we get the higher volume, we get the rally up on lower volume. Things are looking good. Take my entry short, just no follow through. So I wound up cutting this trade as it reclaimed $142 for about a 26% loss. And again, I'm just staying sized down. I was in with literally 1 contract here. So it was only a $19 loss for me. However, percentage wise, it's a big loss, right? 24% or so, 25, 26%, something like that on this trade. So very unfortunate. I don't think that this is necessarily a bad trade, just something that we didn't get follow through on. Now, if I could go back and redo this trade, I think that I probably should have just went for it short during this consolidation. But one of my rules is that, you know, I don't go short or long on a stock if it's consolidating at a trigger level. Typically, what I like to do is wait for the confirmation first and then go in on a retest. And so that's what I was trying to do here. I mean, hindsight's 2020. Yeah, I can look back at this and say I should have went short during the consolidation. I would have capitalized on this move there. But in real time, who knows? This could have just bounced off of this price point and rallied right back up to the high of day. There was really no confirmation then during this consolidation. It would have just been a 50-50 shot. And in this case, it would have worked. So I do go back in on this, right? I'm looking at this and I'm like, okay, Google's pretty weak on the day. We do get a break of this uptrend trend line, but I noticed that it's breaking that uptrend trend line into a almost like a pennant pattern, right? And this pennant pattern then breaks down. So it's not breaking out. It breaks down from the pennant pattern. And I go short thinking that this is maybe going to be our re-break of 142. We're going to get the test of the low of day. And I take my entry short here. We enter right into a phase of consolidation where it's up, down, up, down, up, down, and eventually just comes down to this price point where I'm at break even. I wound up just closing the trade out at break even. I knew that it would potentially work or could potentially work later on, but it's not worth it for me to hold after, you know, 2 losing trades like this. It should have, in my opinion, worked right away if the timing was right. The timing was not right, so I just wound up closing the trade for break even, so I didn't continue to add to my losses for the day. So this marks 3 red days in a row off of the in the $1,000 account challenge. Again, down $150 today in the account, or 6.81%. I think that I'm officially in a trading slump. You know, this just isn't my week to trade. I need to figure out what I'm going to do from here and how I'm going to start moving forward, because giving back these profits like this 6, 7, 8% per day eventually is going to blow this account. So I can't keep doing this. I think that what I might wind up doing is just taking a break from the challenge for a couple of days, taking a couple of days off from trading. You know, I might take Friday off, I might take Monday off, extend my weekend, let this news settle, and come back next week, hopefully with a clean start and a clean slate and a fresh mind, and get these losses behind me so that we can move forward and continue to grow this account. Press that like button if you haven't done so already. It's the best way to support this type of work that I do. And if you're not a subscriber to the YouTube channel, please subscribe. That's the best way to support me as well. And they're both free to do. Thank you so much for your time. And I will see you later when we may or may not continue the $1,000 account challenge. Cheers and take care.